What's going on, dividend chasers? It's the Dividend Bloodhound here with another investing episode. In this episode we're going to talk about 3 dividend aristocrat stocks ready for your portfolio to add whenever you like, bringing a stable 25 years plus dividend growth and dividend paying history to your portfolio and a safer place to put your money in the long term. These 3 stocks are McDonald's, Kimberly-Clark, and the new joiner that joined in February this year, Realty Income. These stocks need no introduction really. However, what I will say is Realty Income is a monthly paying dividend payer, so you get your income each month instead of on a quarterly or 6 monthly basis, and this is great for building that consistent income and drip investing all that money straight back in to buy even more shares. If this video brings you some value, please smash that like button in the corner there. If you're brand new to this channel, never seen me before, I'm the Dividend Bloodhound. I aim to bring you some really good dividend and investing content. And if you could smash that subscribe button, or even better, hit the notification bell as well, that would be absolutely fantastic and I'll be very grateful for that. That being said, let's actually get into the video now and let's have a look at these 3 fantastic companies and a fantastic opportunity to get in there while they are cheap at the moment as well. Let's get in there. What's going on again, guys? Welcome to my analysis center, and here we are looking at the 3 stocks we're going to talk about today. So first on my list is McDonald's. We might as well start there. The Golden Arches, you've heard of these guys. You've probably eaten there within the last couple of months or so, maybe not so recently due to the health crisis, but you will have definitely seen these around and know exactly who they are. A massive food company, or arguably a real estate company, spread globally across the world. Very well known in almost every country in the world, especially if they've got any sort of Western presence. So let's have a look at some of the fundamentals then. So they have a market cap of 136.89 billion, PE ratio of 23.28, revenue of $21 billion, EPS of $7.91, nice dividend yield of 2.72%, and net income of $6 billion. As you can see, a absolutely huge profit to be making. They have consistently raised their dividends for 25 years or more, we know this, but let's have a quick look at what it looks like over the last 3 years. So the last 3 years, McDonald's has raised its dividends by 9% overall, which is pretty good in my opinion, especially for a company that is supposed to be far more stable and just churns out money all the time. One thing to make a note of though is their debt level, which has hampered the share price just recently, as well as store closures due to the health crisis. So their debt to assets ratio here, you can see, is 117%. So that is a little bit of a worry there. Basically all of McDonald's assets are worth 47 billion. However, the debt that they owe to other companies is 55 billion. So that is something worth taking note of, and if you were going to buy into this company, that is something of a little concern. However, this company is a massive cash machine, so I don't think they will have too much trouble keeping up with that debt. That being said, let's have a look at the share price. So today you can buy for $185 per share. It's peaked in July 2019 at $215 a share. In recent lows, you could have got hold of it for as low as $135, which was an absolute bargain in my opinion. You could have really done quite well for yourself here and really increased that yield and yield on cost. Recovered back up now to a little bit, but I think to 185, but I think it'll be a long time before we see anything like the peak prices up at like 220 and then an increase from there onwards, especially with so many stores still being shut at the moment. Hello again guys, welcome back to the real world. That is McDonald's wrapped up and complete in a nice bow for you. Absolutely fantastic company. one of the world's most valuable brands, definitely up there with the likes of Coke and Starbucks, that side of things. A lot of people can't live a week without going there, so real cash flow generator for them right there. As you can see, they do have a significant debt level, so that is something to take note of, and they are quite highly valued in terms of like their brand, and you could see that reflected in basically their revenue and in terms of market cap. However, it does feature in my portfolio. I do have a share in this company, and I plan to reinvest straight into it as much as I can. And I believe there's always going to be a place for it in my portfolio. I can't see a time where I will ever sell out of this company, because it is just so valuable and just turns over so much money all the time. That being said, that wraps us up there really for McDonald's. The next company we're going to go on to is Kimberly-Clark, another stalwart of a company where you probably use its products every single day without even knowing it. It's, in terms of, we're always going to need toilet paper, and we're always going to need hand dryers and hand towels and that side of things. And it's just going to keep supplying that demand over and over and over again, and reward us, the investors, for doing so, which is absolutely fantastic. That being said, let's actually get back in there and let's have a look at Kimberly-Clark now. Let's go. Hello again, guys, welcome back in, and here we go straight into Kimberly-Clark, ticker KMB. Also, quick note that McDonald's ticker is MCD, which you probably already know anyway. An absolute Goliath company that's been manufacturing tissue paper and toilet roll for a very long time. As we know, they've been raising their dividends for north of 25 years, and will continue to do so for the very long term by the look of it. So yeah, the ticker we've already mentioned is KMB, and let's have a look at some of the fundamentals here. So they have a market cap of 46.6 billion, a PE ratio of 19.86, revenue of 18.45 billion, EPS of $6.89, and a nice healthy yield of 3.13%. Got a net income of 2.16 billion, which is a nice healthy profit and a very good profit margin there of 11.69%. Let's quickly have a little look at, we know they've been raising their dividends for 25 years. Let's have a little look how far they've been raising their dividends year on year for the last 3 years. So here we go, let's have a quick look. As you can see there, 4%, so nothing mental, nothing absolutely ridiculous, but that is still a reward year on year for staying loyal to this company, which is absolutely fantastic. And if you hold this company in the long term, over 5 years, you're always going to be far better off than where you started. And that's probably reflected in terms of dividend, but also the share price itself, which we're going to just have a quick look at now. So as you can see, today it's trading for $137.57 a share, and it's remained largely consistent over the last year. And then over its maximum time period, you can see it gets a little bit more up and down, but largely, even with the health crisis right in the middle of this, it didn't take a knock, and it didn't take a knock for very long. So yeah, you got $137 today. It's peaked recently at 147, so this is quite hot, still quite a high price to pay for this company, but it's viewed that its products are going to be used a lot right now during this health crisis, which is why the price is still where it is and still very profitable. And you could have got hold of it in 2018 at $100, and then most recently I do think that it dropped to almost near there, so 112 is the cheapest you could have got it in the midst of this pandemic, as we've well seen. So another great company, and that is the thing with dividend aristocrats, is you do pay a slight premium for owning aristocrats because of the stability that they offer, and that is just something that you sort of have to accept. That means your yield will be lower, but you can guarantee that it's going to, or practically guarantee that it's going to go up year on year on year and keep raising. And that is exactly, as dividend income investors and growth investors, that is exactly what we want. Hello again, guys, welcome back to the real world. So there we had Kimberly-Clark, and I've just spoken quite heavily about the the fundamentals of the company and just how solid it is overall and how its products will always be required. I mean, take a look at the stock price at the moment. We're in the midst of a global pandemic and it is still largely the same as where it was. Took a little dip down to $115, I think it was. However, it's bounced back to where it was almost immediately after that because of its products being required by the pandemic, but that just also shows you the strength of the company. You do pay a premium for these companies exactly the same for the most part as you do with Dividend Kings, because you've got that safety net there of knowing its history, and you've got a lot of people do the same sort of thing. They pick out Kings and Aristocrats as their individual stocks. So a lot of people will invest in an ETF for the diversity side of things, but if they do want to do single stock picks, most people will go with the ones that have got an absolutely glowing history, and that will be your Kings and your Aristocrats, which is exactly why I'm doing this video today. Our last stock is slightly different to the other two, as it has only just achieved its Dividend Aristocrat status this year in February, and it is a monthly dividend payer, which is absolutely fantastic for us, and it means you get a little reward every single month. So you get 12 payments, dividend checks a year, and if you can build up a solid position in this, now I'm talking you're probably going up north of like $1,000 or £1,000 worth of shares, you can actually get quite a healthy chunk of money hit your account each month. I think somebody did do the maths on it recently, and I do forget their name, and I do apologise for that. I'm not trying to claim any credit for this, and you can probably do this yourself by just doing the maths. But if you own $200,000 worth, $212,000 worth of Reality Income shares, then that would get you $1,000 worth of monthly income. So $1,000 hitting your account every single month. I know most of us don't have that sort of money, but it's just something to like get the old mind working a little bit and show you the direction of which you want to go. And you'd include this as part of your whole portfolio. You wouldn't just throw all your money into Reality Income, but it's nice to just have that little warm, cozy feeling of having a dividend income arrive every single month, and you know it's going to be there each and every time, whereas all the others will come in every 3 months or so, or every 6 months. For example, with like Coca-Cola, or some British stocks only pay every 6 months. Anyway, I've digressed a little bit there. Let's actually get into Reality Income. Let's have a proper look at their fundamentals, and then we'll go from there on the other side. Let's get in and have a look at it. Let's go. Hello again, guys. Welcome back into the analysis part. Here we are. We have Reality Income. Nice little red house there for you to look at. And as I'm now going to say, it is a real estate investment trust. Owns an awful lot of property, especially in the United States. Has taken a bit of a knock recently due to it feels like I'm repeating myself, but due to the pandemic, because there's a lot of fear out there that with people not spending any money, they won't be able to pay their rent, and the cycle continues, and who's going to get hit by that? Well, it's going to be the landlord. With all the shops shut, shops aren't making money, so shops can't pay their rent. Same with people that are employed or unemployed at the moment. Who's going to pay their rent if they haven't got a job? This side of things. I read on the news recently that there's over 4 million people now skipping their mortgage payments in America, which means there must be a similar number of people missing their rent payments or taking a rent holiday from their landlords as well. I know here in the UK you can apply for a 3-month holiday from paying your rent, and in turn the landlord can take a 3-month holiday from paying the mortgage to the banks, of course. So this shows you the knock-on effect of the pandemic, which is reflected in the share price at the moment. Anyway, let's get right back in and have a look. So we have Reality Income here. Ticker is O. It is a huge real estate investment trust with 4,944 properties located in 49 states, with over 83 million square feet of leasable space all across the United States, and making an absolute fortune for doing so. It doesn't have a great wage bill because it only has 194 employees, which is pretty damn good, to be fair. Right, anyway, what we're looking for is the fundamentals, of course. So its market cap is 17.67 billion, PE ratio of 36.42, revenue of 1.49 billion, EPS of $1.41, and a big juicy yield of 5.44%, which is pretty big in comparison to the other two aristocrats that we've seen. And here you can see its net income is a lot lower than the other aristocrats. However, $436 million is nothing to be sniffed at in terms of profit, and not a big healthy profit margin of 30%, which is a lot more than the aristocrats that we looked at. We'll have a little look at how much they've been raising their dividends over the last 3 years, as always. So we go into the growth section here, and you can see that over the last 3 years the dividend has been raised by 4.26%, and the yield has gone up because the share price has come down quite heavily due to the crisis we are experiencing. So at the moment you can pick yourself up one of these nice monthly paying shares, get income every single month like a salary for just $51, which in my opinion is an absolute bargain, and I can't wait for this to come to free trade so I can get a heavy position going in this one as well, earning me a extra monthly income. So there we have it. So $51 a share at the moment. It's been a touch lower, touched the bottom of $48 in the last month or so, which would have been obviously even better. $42 there is the lowest during this crisis, which again would have been an absolutely epic time to buy, even though now still is, to be fair. You can see the steep cliff edge there from the start of the crisis to now, which is pretty steep, and then it's peaked in the last year or so at $82 before all this kicked off. So there's even, not only do you get a monthly income out of this, there's even a potential for appreciation back to eventually back to where the stock price was. So every share that you get, you could potentially make nearly $30 on, just in terms of appreciation, never mind the monthly income that you're going to get. I really do love this company, and I think a lot of people love the look of this company, and a lot of people do too, and that is why it features in most people's portfolios. Hello again guys, welcome back to the real world. So that wraps up our 3 stocks, and that wraps up Reality Income there. Brilliant company, can't wait until it comes to free trade at the end of May so I can finally add it to my portfolio. Been looking forward to that one for a while. I really want to build up a considerable position, as in one of my largest holdings in Reality Income, because I believe in, as a buy-to-let investor myself with 2 buy-to-let properties, I really believe in the cash flow generation of real estate investment trusts and real estate investing itself. I believe it's probably one of the safer places where you can have your money. So that being said, that's definitely getting into my portfolio. Anyway, that pretty much wraps us up. One thing I do want to say is thank you for having the endurance. If you're still here, thank you for having the endurance to sticking around to the end of the video. I really appreciate the watch time right now, and I really need it. If you haven't already, please hit the like button in the corner there. And if you've never been here to this channel before and you haven't already subscribed, but you've got to this stage in the video, I would really appreciate it, and it would help me out massively if you could hit the subscribe button so you can see my content again, and even ding that little notification bell so you get notified when I release new content in the future. That pretty much wraps us all up. Thank you again for watching. I'll see you in my very next video, and yeah, keep safe, and I'll see you soon. Bye bye.